Hi, fellow traders. Well, as promised, I'm going to give you my thoughts on over trading. This is something I get questions about every day, and too often it's the difference between new traders really starting off on the right foot or just digging themselves in a hole that they just see no way out of and eventually quit. So I want to share my thoughts on it. But before we do, I'm going to go over a couple of trades I took this morning, because this is where a lot of this over trading starts. It starts from when you take a trade that doesn't turn out the way you want it to, and it brings some emotions into trading, and we react to it, and it causes us to take more trades, more likely trade things that aren't set up, and it just causes for a bad time. So we're going to talk about that and as we move forward. So you're going to see these examples I'm going to keep referring to as we move forward in the class. But this morning I was looking at this for opening range trade. Now obviously this did not break the opening range high on the 5-minute opening range high. This is an instance where, because the wick is longer than the body, I'm going to anticipate this, and as soon as we broke the pre-market high, I jumped long. So this was not, I can't say that this was the opening range strategy failing, because it technically never set up. I just took an early entry on it, and that was that. So I was actually going long in this, and it ended up stopping me out. And it actually sold off, but you could see there's just too much support just to jump in it. It just happened to fall through support. I don't short into support. I don't buy into resistance. So I don't roll the dice like that. But at the open, because of the volatility, I will take a little bit more risk and do this trade. But we got a candle that I did not expect this candle to be as long or longer than the original candle. Typically this one will be smaller and the volatility is lighter, but it just didn't happen today and ended up stopping out. Now what happens is, when our first strategy doesn't work, our first trade doesn't work, we don't want to be red. In our minds, we've got the whole day, so we're going to just look and bear down, and we're going to focus even harder to find a trade. That's when we start getting in trouble, because we stop focusing on our strategy and we just start looking for a stock that may be moving. And we'll listen to what other people post. You got others that they don't really have a watch list. They're just looking for stuff that's moving. And whatever looks like it moved at the open, they'll blurt it out. And then everybody runs to it and says, oh yeah, this is it. And you try to trade it. You don't properly vet it. So you don't know if you're buying into resistance or shorting into support. You don't know it. You end up getting stopped out, and it's just a cycle that continues. That's where over trading comes from. So this is a prime example of a trade that can really get you upset, and because sometimes it gets me upset. If I have a really nice setup that should have given me some decent profit and it doesn't work, I get mad and I want to take my anger out on the market, and that's a recipe for disaster, because then I would take unnecessary trades and I would overtrade. So I wanted to share this because this is one of the times that can cause you to do this. And here is my trend continuation trade. This is typically what I get into if my opening range trades don't work. Here's one where We traded inside the opening range for the first 30 minutes. We're after 10 o'clock. I know this looks like an opening range breakdown, a 5-minute opening range breakdown. However, it isn't. This is a trend continuation on this rejection here. I had to wait until we got below all of this support, so that I could short it. And I shorted it under all of this. We got to move right down to the 100. That's the one I was looking for. And unfortunately, it bounced and came back and took me back out at break even. Now, this trade can frustrate you too, because here I waited. I traded my strategy just like I always do. I got a little bit of the move, but I didn't get everything back that I lost. I mean, I'm not looking at my P&L, but I know how much I was risking on that other trade, and you can add up in your head, how 50 shares at just over $1 is just over $50. So that only took a small dent out of your early losses, and then we bounce. And this can get you frustrated and cause you to jump right back short when this thing looks like it rejects. Here's what happens. You get stopped out at break even, and then it pulls back and it looks like it's getting ready to go short. So what happens, you get pissed off because it stops you out. It looks like it went right to my stop. And guys, my stop was at 122.90. I was allowing 4 cents for slippage, and it went right to 122.90. This did not go a penny over 122.90. So even had I left my stop at 122.94, which is the direct break even, it never would have stopped me out until over here. But here, this is significant because it tapped it and it came down, and here we made a lower low. If I was revenge trading, I would have taken this short right then and there. I would have said UMF, FU, and I would jump in short. You know what? Market makers know that. So why do you think it pulled? Why do you think it turned around here in the middle of nowhere? There's no technical level anywhere. It just turned around in the middle of nowhere because they knew there were people getting in off this rejection. There are people that got pissed off because they got stopped out. They jumped back in, and look at this aggressive buying. They knew it. And if I got emotional and got pissed off and wanted to revenge trade because I got stopped out, I would have lost money again. So this little bit I made would have been eaten up on this stop out. So another example of where you're trading, if a trade doesn't go your way, then you get frustrated and you get stopped out. Now, before we move on, I do want to mention this. There's a couple of exit strategies, and I didn't use the correct one. Okay, the correct exit strategy on this would have been to take it all off at this level. That was the correct exit strategy. Because I know that I'm down, and I need to maximize the profits here. So if it had, sold through this, it would have bounced or given me another opportunity to get in off of this level for another trade down. So the smartest thing for me to do would have been to take it off. But my normal MO is to take half off and then let the rest go. The other thing I could have done was take 2/3 off and leave a third on and add if we got below here. All right, that was another deal. Another one would be take it off once this candle made a new high relative to this candle. Just take it off and wait for a reset. And again, had you done that, you probably would have jumped in on this. And that was, you know, some really good candy here for you to jump on. So I just wanted to share those with you because these two types of trades can segue into over trading. And there's nothing wrong with these trades. These are legit trades that, okay, they just didn't work out. This PG just didn't follow through the way I wanted it to. It did hit my first target, which was good. It was over a point away. That was excellent. Nothing wrong with that, other than I probably should have executed this a little bit different based on my position size and the fact that I lost on this first trade. Nothing wrong with this trade. This is what I do from time to time. I've talked about the wick being longer than the body and being able to trade off of the body. I've talked about this. This is what I do. Yes, it's a little bit more risky. I felt like today the risk was worth the potential reward. It didn't work out, so we're moving on. And that's the mindset that you have to have. But real quick, I wanted to point this out. You know, yesterday, look at the volume. This is the spot. Look at the volume yesterday. Today, we're at 115. We had only traded half of what we traded yesterday. So it is a potential, unless something happens and volume floods in the market, we're potentially going to close on less volume today than we had yesterday. And that's not good. For day traders, we need market participants. We need some volume in this market. Now, the SPY just gives us an indication of how busy the market is. It's not, you know, some stocks are going to be above volume because they have their own catalyst and stuff. But I'm just using the SPY to kind of base what's going on in the market. So it was, when you see days like this, when you're in this time, it's not you, it's not your strategy, it's the market. The market needs participants, it needs volatility in order for us to trade, especially day traders. Okay? All right. So let's stop over trading. Now, I tell you, I don't read a whole lot of trading books. And let me clarify that. I don't read a lot of how-to trading books. I read books about people. People who were stock traders. People who talk about the psychology of trading. Not people who are, not books on how to stock trade. I don't think you can learn to trade by that. I like books. They may talk about how to trade, but they got more of the person in it, more of the experience of trading. And that's why I feel what I do is so valuable. And why I feel that I am so undervalued, because I don't know of anybody who's willing to put themselves out there every day, win, lose, or draw. And you actually get to see it happen live in real time. I think that's the best way to learn. And that you know that money is made by sitting and waiting and not by just trading in and out of trades. And this is one of the statements that he made in Reminiscences of a Stock Operator. Guys, this book is it's almost 100 years old. All right, and you know, and this is a direct quote from him way back then. He said, I learned early that there's nothing new in Wall Street. There can't be, because speculation is as old as the hills. If you know the history of the candlestick charts, you know how long speculation has been around. And it was probably been around before then. You know, and the reason why this is still accurate is because the market is made up of people. And people don't change. Okay, fear and greed have always driven our behavior. Fear and greed is what started wars. Way back when. It's as long as there's a speculative market, there's going to be fear and greed. And that is at the core of all of this. So as long as the market is in existence, it's going to be the same. The same thing is going to happen. The catalysts are going to be different. The technology and how it happens may be different, but it's going to happen. The market's going to repeat itself. But the issue that we see in the market is newer traders. They come in with the idea thinking that they always need to be doing something, that they need to be in and out of trades, that they need to be chasing trades all day, that if this trade doesn't work, they need to go out and try to find something else. And, you know, up until last month, you would lose a lot of commissions in addition to the money that you lose. Now, if you're fortunate enough to be in a broker that doesn't charge you commissions, you're still going to lose money. You just won't lose those commissions. And so your death may be prolonged a little bit. But if you still overtrade, if it's still an issue, you're still going to have trouble being consistently profitable. Okay, and then this mindset that they have is really easy for the market to separate you from your money. I see it happen over and over and over again. I get frustrated as a teacher because nobody is willing to listen. Everybody thinks it's a limiting mindset, and it's not. It's the proper mindset in order to make money in this market. But it's not exciting. It's not marketable. And so I don't get a lot of excitement around. I don't get a lot of people praising that. But the best feeling of a teacher, I may have 100 students, but if one gets the message and they turn their life around, it makes what I do worthwhile. In this past week, I think I shared this story last week, the end of last week when I did my recap video. If I didn't, you know, I have several students that I have one-on-one mentoring with. It's free, and it comes with the Roadmap to Success program, 6 months of mentoring. You'd be surprised how many people don't take advantage of it and just quit before, you know, it's just that they can't figure out what's going on, so instead of asking, they quit. You know, unfortunately, that's what happens. You know, it doesn't hurt me, but it doesn't make me feel good that people quit. Because I don't feel like they're quitting on me. I feel like they're quitting on themselves. And that's a bad feeling for a teacher when people quit on themselves. But for those guys that followed my lead last month, 1 trade a day, win, lose, or draw. 1 trade a day. All 5 that followed that move, that guidance in the last 2 weeks have been green at the end of the week. And they can't believe it. Some have been trading for 2 years and have never had 2 green weeks back to back. It works. Not over trading works. Okay, not feeling that you have to sit here and trade all day, it works. Alright, trading is a profession of survival, and a big aspect of surviving and growing your trading account is not taking unnecessary losses from ill-advised trades. And that's what I'm trying to get you guys to do. So we all know what overtrading is. We don't have to go over the definition of that. But causes of overtrading. All right. Trying to make back losses. Okay, I got this in here twice. Trying to make back losses. Traders feeling that their job is consistently to be in trades. They don't feel like they're a trader unless they're trading consistently. Trying to make up losses. Revenge trading. Yeah. And just boredom. It's like, man, I'm tired of sitting. I just want to be in something. I'm just gonna take this and see what it does. That you don't want to do that. That is not the right mindset, guys. So we've got different types of overtrading. We've got discretionary, and that's based on your option to use different position sizes. What you don't have, it's like, I'm down $100, so I'm gonna take 1,000 shares of this so I can get just 10 cents, and that'll put me back even. You know, that's discretionary overtrading. We're not gonna talk a lot about that today, but that is considered a part of overtrading when you try to make up your losses with adding position size. Technical traders or technical overtrading. It refers to new traders who are just learning technical indicators and believe that these indicators are the answer to all of their trading problems. They typically develop rules and use these indicators as a justification for them taking trades. Like, if it broke the 9, I'm going to buy it. If it broke to the upside, I'm going to buy it long, and I'm going to use the 9 as my guide. Or if it breaks below the 9, I'm going to short or use VWAP. There was a lot of people that used to use VWAP back in the day, that if it breaks over VWAP, we go long. If it breaks below VWAP, we go short. A lot of people did that, but it wasn't a sustainable strategy. Those that used to trade VWAP they don't really do it anymore. They can't, because it doesn't work. But that's the technical overtrading. Action overtrading are you action junkies who just have to be doing something. You're looking for this quick $2,000, $3,000, $4,000, $5,000 trade. You just got to have it. And so you're in perpetual search for that trade. And that's the action-based type of overtrading. So the technical and the action are the ones that we really are going to focus on the most. Okay, so how do you overcome this? It's just like a alcoholic or a drug addict. You got to admit that you have an overtrading problem. All right, so let's admit I have an overtrading problem. Because the only way that you can work on overcoming that trading problem is for you to first admit it. But too many of us don't recognize that it's a problem. And it's going to be even harder now with zero commissions. It's going to be hard to recognize that you have a problem overtrading. So if you start your day out green and then systematically give back dollars throughout the day, you're most likely overtrading. More than likely, you are overtrading. All right. Number 2, don't trade your P&L. Do not watch the damn thing. Who cares? Trade the chart. Trade the market. The hell with your P&L. All right, the hell with it. Who cares about it? The only time I really care about my P&L is at the end of the week. I need to be green at the end of the week so I can see my equity curve go up. Even if it only goes up a fraction of an inch is going up, and that's what I want to see. But don't trade your P&L. Just take it off. You know, don't have these dollar goals and stuff that you need to make every day. It's crazy. It creates the mindset that you have to trade, and you don't. All right. The next, you want to establish rules of execution. So if you have your own strategy, there needs to be rules governing your execution. What triggers the setup? And you don't get in until that setup triggers. You know, you want to limit the amount of strategies you trade. You know, some people tell me I got 6 and 7 strategies that I try to trade every day. Oh shit. You know, half of them are the same strategy. You just change the rules. And it's the same damn strategy. No, so you only need to have a couple of strategies. I trade 2 main strategies. I do have 3 that I trade in a small account, but it's mainly centered around 2. The 2 examples I showed you this morning. The opening range trade and the trend continuation. Those are only 2 that I really trade. Yeah, I'll trade reversals, but the market's got to be volatile for me to be able to get in a good reversal. So you got to limit the amount of strategies you trade, and also have rules of execution for those strategies. Now, most of you will find stocks from scans. There are a select few that use stock twits and Twitter and all of that to scan for stocks. But whatever you do, stick to the stocks that you scan. And that's what I try to show you every day. If a stock's not on my scan, you will not see me chasing it. If you do, it's a rare occasion, and I'm going to explain to you step by step why I'm doing it. So, stick to the stocks from your scan. Establish a max loss rule. Like, if you have 3 losses in a row, shut it down for the day. Just cut it off and walk away. And you want to have a max dollar loss, so that, let's say if my max dollar loss is $300, and I lose 200 on one trade and 100 on the next, I'm done for the day. Like this morning, I lost 200 on my first trade. Had I lost 100 on my second trade, I'd have been done for the day. I'm not trading anymore. I hit my max loss. If not, you're going to try to make up that loss. And you may try to find a stock that you could load up on and try to make $300. You'd be surprised how the human brain works when it comes to losses, when it comes to greed. You know, it makes you do some stupid stuff. Fear makes you do some stupid stuff. So in this instance, you want to establish some rules of execution. Now, take timeouts. This is very, very, very important. Timeout. There are different types of timeouts, but the ones that I'm referring to, the downtime between trades, that's a timeout. Reflect on how you feel after that first trade. Now, I just remembered, I forgot to put a key element in one of the reasons for over trading. You know, having a big trade, having your first trade be a big trade, that will cause you to trade all day when you shouldn't be trading. So you want this downtime between trades. If you had a big winner, calm your ass down. If you had a big loser, calm your ass down. And that's another perk for being in the chat room. When you see me take a big loss or make a mistake, I will go for a walk. I'll go outside and chop wood. I'll do something to bring my mindset back in tune and grounded so that I can hit this next trade. And no, that CBD shit doesn't work. I tried it. It doesn't calm me down. Yeah. The only thing that calms me down is beating a hammer on something or chopping wood just to work off my frustrations. Ride my bike. But chopping wood gets rid of that aggression a lot faster. There's also the downtime between market close and open. That doesn't have anything to do with over trading during the day. But that is a very important downtime for you to reflect on your day and be mentally prepared for the next day. All right, now downtime due to our performance challenges. If we hit 2 losers in a row and we know the next loss is going to take us out of the game that day, we need to stop. We need to take a timeout, refocus before we go back and re-engage the market. All right, because what you need to ask yourself now, how do you prepare for your next trade? Do you have a process for preparing for your next trade? If you don't, please go out and get one. Figure it out. You need to have some type of process to get your mind right for the next trade. Do you have a set routine to follow if you have multiple losses? You know, for me, I get 2 losses in a row. I know I'm going to go outside and chop something or beat something. That's just me. Clear my head and come back and re-engage the market the right way. That's what I'm going to do. I know my routine. But you'd be surprised what a lot of people do. You know, I'm not going to repeat them. Some of them are probably private that they don't want me to repeat, so I'm not going to do it. But you'd be surprised some of the things. And it has to be what works for you. Okay? So, I've only got 2 things. 2 things for you to remember. If you do these 2 things, I think you're going to be on the way to helping yourself not trade all day. All right, and then I'm going to add a third one here, but these 2 things can really hurt your ability to manage your trading day. The main thing, don't trade your P&L. All right, don't trade it. Trade the chart, trade the market, not your P&L. Don't think that you have to trade all day, because you don't. You don't have to take a trade at all that day. Break even or no trades is better than a red day any day. All right, remember that. All right, and then the goal with don't trade your P&L is, I'm a firm believer in not having a minimum daily goal. FISB. I'm a firm believer in that. Because if you have a daily goal, you're going to spend all day trying to find trades to hit that goal. And you don't want to do that. You want to focus on what the market is giving you that day and take advantage of that. All right, so the third one is take time outs. Now, I go to lunch every day at 11. Now, sometimes it'll be late depending on whether I'm waiting to get in a trade or something. Like today, I waited till about 11:30 so that I could get in this trade before I left, so you can see my entry and all of that. But I will walk away from my platform and go to lunch. I need that time away. Now, yeah, sometimes I'll have my laptop up I'll be at a place eating, and I try to find places that have Wi-Fi, and I'll go and I'll sit there and I'll eat. I'll have my laptop up. I don't have multiple screens. Yeah, I can take my USB screens and I could have 3 sitting right there. But I'm walking away from all of these multiple screens. I'm just watching that one screen. And if I'm managing a trade, or if I'm tracking a stock, then I'm going to be ready to get in it. But my mind is clear. I'm not looking at a whole bunch of other garbage. No, but I'm taking a time out from all of this input at my desk. So you want to take time outs. You want to take time between trades to kind of reassess your mental state. If you're exhausted, if a trade mentally exhausted you, you need to stop. Take a break. Take a 15-minute nap or something. Because you have to try to recharge your batteries a little bit. Once you deplete your mental energy, you're not going to get it back 100% unless you go to sleep, unless you take a nap. That's a proven scientific fact. Alright, so just the stuff that I share with you, this is exactly what I do. This is what I talk to my traders about every day. It's the right thing to do, guys. If you're just learning how to trade, believe me, I've been through this. I'm one person that has been through this and has documented my every move. I've got several people that want me to write a book about my journey. You know, that's something I might do here in the near future, but you know, because since everything is already laid out there on my blog and all of that, it's all well documented. So it's just a matter of putting it together. But you know, the main thing is, I'm not going to sit here and tell you to do something that I don't do myself. That's why I trade in a small account every day, right along with you guys that I'm trying to teach. You know, I don't have a problem doing that because it's what I do. You know, so I'm not going to tell you to do something or ask you to do something that I don't do myself or that I don't believe in. Alright, so like I told you guys, there's $249. You can't beat this deal. You can't beat it with an ugly stick, I'm telling you. 6 months of being in the community, you get all the classes. You get all the benefit of my years of experience in growing a small account. Growing out of my job, because you have to grow out of it. You can't just quit it. You have to grow out of it. And if you don't want to grow out of your job, you just want a substantial second income because you have a job that's very flexible, it's even better. Alright, so for those 6 months, is all access to everything. You know, I don't sell anything separately except for mentoring time, because that's my time and it's very valuable to me. But other than that, you never have to buy another class, anything. 6 months access to all of that, only $249. Like I said, you can't beat it. Once I get filled up from the people that rotate out at the end of this month, we'll close it up and we'll start the process over again. Alright guys, so I hope this class helped you out. I'm about 10 minutes over what I planned, but I did share some trades, so that kind of added some more time to it. But if you got any questions, ed at AverageJoeTrader.com. I'll be glad to help, or go to AverageJoeTrader.com and use the contact me page, and I will get back with you. So you guys have a great day, and I will catch you on the other side.